morning, everybody. Welcome to CPI Thursday. Thursday, July 11th, just coming on 5 a.m. Been up pretty much all night, and nothing at all of any kind of interest has been taking place, no matter anywhere you looked. And I'm watching over here the Japanese yen 161.78, and the bullish case for the Japanese yen to continue higher, not being able to break that 161.78. So anyway, today is CPI. You're going to get the CPI data before the market opens. Before the market opens, we are already going to know what direction we are heading into. And as you can see, tracking CPI data going back years, CPI, as of recent, call it the last year and a half, has not been a bearish scenario because it is very easy to report what you want to report, and then all you need to do is go and make adjustments next month when you report to the prior month, which they have done multiple times, and they have made many different changes to the revised their methodology of calculating it so that things that are actually applicable to the current inflation world are not included. So anyway, CPI comes out at 8:30. Last two CPIs, gap ups. Those gaps have not been filled. Both green days. Last red day that we had was the big, humongous gap down that we had back there in April. And if there is a gap down, you just unfortunately are not going to be able to take advantage of it unless you are already positioned or you have interactive brokers. But there again, I have done everything that I can possibly do in my power, caring about every single person individually to influence you to go out to September, October, November, December, January for the better part of 6 weeks. If you're trading short term, I wish you the greatest of luck. And Keith has been doing absolutely spectacular, and now he has been playing for better part of a week with nothing but house money. You're killing it. Continue progressing and doing exactly as you're doing. I have no comments to make. You do not need to go and put the 89-day simple moving average on your chart in order to be able to take a trade. So CPI 8:30, SPX 7 green closes in a row. Now, why is this significant? Well, the reason this is significant is because we had 8 green closes in a row after Israel invaded Gaza, the October lows. We had 8 green closes in a row back in October, the end of October of 2021. You don't see this shit. You just don't see it. Come over onto the QQQ, and there you go. We are on to 11 trading sessions without a minus 1% day. The alarm starts going off when you get to 12. We are at 55 trading sessions without a minus 2% day. Over on the spreads, 48, 348. It's not something that you see. You just don't see this. And then over on the Russell, which we track, you have been stuck in 202, 198, 199 for 2 months. And every time that you get up in that 203.69, which you are at right now, you just tend to fail and go right back on down, heading towards that 199, 198. So I leave you with that. I take you very quickly to a very detailed but broad and very anomaly looking NASDAQ. QQQ, 503.52. Why does it matter? We'll see in a minute. 6.33% move off of the May 31, off of the most recent low. Looking at a 5-day here, zooming into a 15-day. Coming off of that, June 24th, 6.33%. We broke above that resistance area over here about a week ago, right on there, and here we are trending on up here into 503.52. Why does it matter? Well, this is the reason why I took onto that trade. We hit this 503.56. We've got that 504.16 above. I discussed this over the weekend, now that we had made it up here into 490s last week. 503.56, 504.16, where I would like to see a top. We talked about there being a wave 3, looking for a wave 4. Very, very possible that this wave 4 that we had going on to Tuesday was a very shallow wave 4. Nothing against it. My view that I'm looking at, I very much like what I see, and thus why you saw me put out the trade yesterday where I have entered into my Septembers. Got into those Septembers with the alert that went out at the end of the day yesterday. So, wider view on this, okay? Wider view. Coming off of this April bottom, it's just been bang, 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 bang. We had an excellent dip there in May. We knew that we were oversold. It was screaming and hollering that we were oversold. Oversold. Our RSI is down to 3. This move that we have had since May 31, with all of the AI and all of the nothing but AI influence. Thank you very much for bringing me up to 503.56, 504.16. I will take my trade and I will be very happy with it. No, I have not updated these Fibonacci retracements because I have no reason to until we take out a prior low. And more significantly, we take out that prior high over here down at 488. Until that's taken out, I'm wasting my time redoing all of these Fibonacci retracements, so we leave it at that. So I bring you over here to the NDX and looking at here from a weekly point of view, as I've been saying, coming off of that April bottom. This is 5 green weeks, a red week, and we are currently into 6 green weeks in a row. Coming off of that October 27 when Israel invaded Gaza, we had 9 green weeks in a row. 5 following that as we went into the beginning of the year, after we had our initial dip at the beginning of the year. We had 7 back last year when AI was invented as we went into the highs in July. 5 off of that big bottom when we started 2023. We had 5 going into the end of 2021. As we place that 2022 high. So I zoom you out a little bit further so you can see this and why this means something. At least to me it means something. Coming in here into the end of 2019, up into 2020 as we went into the COVID highs, we had 7 green weeks followed by 6 green weeks. And then COVID hit. Zoom you out to the beginning, which is a 2009 bottom. I can go down to 2002, but I don't think it applies. Like I said here, you had 8, 4, 5, 7, 6, 8 and 10, 9, 11, 7, 8, 6, 6, 14. But again, coming back over here where you were as you went back into the .com highs, this was like a generational buying opportunity coming off of that 2008, 2007 sell-off. So that's insignificant to consider anything but that. 2012 right here, which is the year Obama was elected. And again, same shit. Coming in here to 2012, bang, the move was very late into the very beginning of April where it topped out. Very, very nice decline coming in here into June. We did not get that. We only got that dip in April, and that was the end of it. Bounced right back up to where we were, going in here into September, and then retraced yet again over here into the elections. This was Obama's re-election year. This was the only year, going back through our lifetimes, anybody in the age of 50, where we have not had an election year decline. First time. Come over here onto your QQQ, and again, coming off of that big COVID bottom, I like what I got. I like the 498.04, I like the 484.32, and as I shared over there prior, I like where we had reached, because here is something that I have had for quite some time, looking over here at 504, 506. I'll bring you on to my gaps only. Oh, this is my gaps only. Anyway, I've got it over on one of the other charts. These in red are all your gaps going back down here to March. Going back to March 2023. These are your gaps. There are gaps that are well below that, but these are your gaps, and I'm not focusing on these gaps. I'm literally focused on here just into April. Anything after April is just butter. But this is where we're at. So again, that was the reason why I got into the trade. So where I will bring you here and leave you off with here is looking at this from the wide point of view. And coming in here onto the 4 hour, you ended the day yesterday with the 4 hour, the RSI at 99.43. Okay, let me pull this out for you. Should have done that to a couple of women. Pulled it out. 99.43. We have been up into this area before, into the 98s. And every time that we reached up into that area, we got a significant decline shortly after it. Shortly after it, significant decline. Shortly after it, significant decline. Here we are at 99. 99. Bring on to a wider view on the 12 hour. 12 hour up here at 97.87. Higher than anything you have ever seen over the last year and a half. Bring it to the daily, looking at a 3 year on a daily. Here you are over here going back into the all-time highs in November of 2021. Here we are where we are currently with a very clean, clear, need the price action to show, sell divergence. Very, very clean sell divergence on the daily, but you need that price to show up. Come on to your weekly. And again, weekly, this has been going ever since last year, summer, June, where we have been climbing up and the RSI has not been climbing up. Well, we are finally making it back up here where the RSI is into 90. Just as it was over here going back into August of 2020, over here where it was into July of 2021, excessively overloaded into this in January of 2020. So, again, wider view as to where we're at. It is a opportunity, in my view, to start getting very aggressive about your positioning with the QQQ. Come on to the SPX. Oh, no, sorry, the Dow Jones. Looking here at a Dow Jones on a 1 hour, 30 days, coming off the lows over here in May. Nothing. Floating, but nothing. 1 hour, fractionally getting overbought. Fractionally getting into overbought. Come over onto your 4 hour. Nothing. Nothing, nothing, nothing. And as you can see here, very clean, right here at this 39,793. You're right at that resistance area from back here in March where you sold off. You're right back up here to where you got a little bit of a head, and we're right back up here onto what could be a right shoulder right here at 39.73. Come into your wider view on your daily. Daily, nothing bearish at all. Coming off of that big bottom over here. Nothing bearish whatsoever. Come on to your weekly, and again, same thing. Just an enormously incredible running sell divergence. Shut the fuck up, you fucking dogs. But you got nothing coming off of it. Russell 2000, here we are. And with the IWM, we've talked about this months and months and months. Nothing. Dead. Absolutely dead. Dead in the water over on the Russell. 5 year weekly. Look at this. Just dead on the weekly. Dead. Waiting for somebody to say, can you please sell me off so that at least I can get oversold? So I leave you here onto the SPX. And the SPX here, looking at it from a 4 hour point of view. Again, excessively overbought as we were back here as we went into the big May top before the sell-off. Right over here, overbought up in the 98s, but it doesn't matter. Doesn't matter until you get price action movement. Sell divergence in place could be very nice. Look over here on your daily, and as you can see here with your bullish RSI on your daily, reaching up here at 93.59. Been up here a couple of times. Been up here over here in December of 2023, where we had this disgusting sell divergence go all the way until April. Doesn't need to be because there's a sell divergence. There's actually a move that comes off of it. Look over here on the weekly, and again, the weekly, finally, all the way back to January 2020, prior to COVID, the weekly has finally breached that 90 level. So that's what I got for you. You are excessively overbought. You are in a scenario that very few traders have ever experienced in their life. It very cleanly looks as if we may have finally hit a top where we can now get a dip and a decline. And the dip and the decline, again, as I stated earlier in the week, I do not see this as a sell-off because we still have earnings coming out at the end of the month. We still have the FOMC meeting on the last day of the month. So what we get, if we get, will only be a dip. And we will still need to be patient, letting, just like back in July of last year, letting it do what it's going to do until all the earnings come out, and then we can move. For reference here, okay, for reference, you topped out here on July 19th. I remember that. It was July 19th, OPEX week, when we topped out last year. And even though earnings were coming out afterwards, we started our sell-off, which went all the way until October 27th. July 19th was when we topped out last year. Not saying that we're topping out, same thing like we did last year prior to everybody reporting earnings, but that's where you're sitting. And for those who are keeping track, the full moon is on July 21. So enjoy yourselves, enjoy your morning, enjoy your CPI. I apologize if I took up too much of your time this morning, and anything that you need, anything you want any questions with, DM me in the chat room. Not only happy, but I'm excessively begging to try and help you.
Turn now to a concerning new study about the apparent presence of metals in tampons. Morgan Norwood is here with those details. Good morning, Morgan.
Hey, good morning to you, Rebecca. As you mentioned, the study really concerning, finding popular tampon brands tested in a lab contained 16 metals that includes arsenic and lead, and this morning it's got many wondering if they're even safe to use. So researchers at UC Berkeley tested 30 tampons from 14 common tampon brands globally and detected a range of levels from 16 metals that they were looking for. This goes for rayon, cotton, mixed material. They were even found in all types, including your organic cotton products. Researchers pointing out that these metals are common in the environment and can come in contact with the parts that these products use in a variety of different ways, right? Researchers think that these results are concerning enough to warrant more research to understand how this could impact our health. With that said, the FDA says it is aware of this study, but notes it doesn't necessarily assess whether these metals are released from tampons when used in the body, and if so, can be absorbed into the body or bloodstream. That means that they're not aware of any current danger to users of the product, but say they will look at this study pretty closely and take action if warranted. Specialists also point out that there is no reason at this time to stop using tampons, guys.
Glad to hear they are taking a closer look.